Is the end of the bull market near? Or was that just another false down move? What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, September the 6th. My goodness gracious, excuse me, October the 6th. Time is flying, and we are going fast through the year. And of course, a lot happened last week. It was quite the action in the markets. You had some crazy stuff happen, but I think it was all fairly predictable. I think, again, we'll cover in markets what actually happened, but we had ISM manufacturing number, a miss, okay, pretty badly. And of course, so after a higher Monday, markets got clobbered on Tuesday. They got re-clobbered on Wednesday. And Thursday, out came ISM services. And of course, down they went again. But out of nowhere, which happens often, okay, out of nowhere, buyers showed up and they pushed the markets up all the way from down 300 to up big on Thursday. And of course, Friday's jobs number, best unemployment in 50 years, of course, pushed up again. And here we are back up at resistance for the S&P. Again, potentially making another lower high here. We'll see what it trades out like. But again, so how was the data, was the news all that good to create that kind of buying? Is the Fed going to be the catalyst for this market, printing more money, lowering interest rates? All good questions. And of course, obviously, the market's new drug is Jerome Powell and the Fed, which is, listen, it's been the drug through Bernanke, through Yellen, and now Powell. Powell was a street guy who everybody thought got it and got the understanding. And of course, I guess you go into the glass towers and you turn into into someone who has no clue. You lose all your common sense the minute you walk into the ivory towers of the Federal Reserve. So in the meantime, okay, you've got the market banking on at least a rate cut in September now instead of December. October instead of December. And don't be surprised if it's bigger than you think it's going to be, because now there's actual reasons and problems in the market. Now you've got slowing manufacturing. Again, we've been talking about this long before it ever hit the street, right? We've been talking about early stages of a recession, issues that are out there. And of course, here they are. So now they're starting to show up. And of course, as we head into earnings season, okay, if the earnings start to miss, now again, we know that there's already been a dramatic number of excuses made for not making earnings already. We know you heard the bull about the strong dollar. I mean, you've heard it, right? I mean, again, this isn't new. Okay, you've heard the bull about the trade wars. Okay, all crap. I mean, all absolutely crapola. Okay, but of course, this will be the excuse. So again. Maybe the big companies that don't make their earnings will be forgiven. But again, once again, remember, they have set the bar extremely low, so it shouldn't be hard to beat them. But again, let's look at around some of the things that could be some concern. Okay, bank loans. Now again, interestingly enough, I was talking to a risk manager at a bank that happens to be a friend of mine, and he was talking to me, and this is another banker now, so you know that I know two, now I know at least two, okay? And he was telling me that he does risk management, and he puts together, he's the middleman between the banker and the credit guy who who sends it for the final decision. And of course, obviously the banker always wants to get the loan done, and the credit guy, they're a little bit more conservative. But he sits and looks at loans every single day, all the time, and he's telling me that they are seeing a number of red flags in the economy that nobody wants to talk about right now. So we already know that we are very good at kicking the can down the road. That's been a fact, right? We already know that we're willing to ignore some of the issues that are out there. So if you look around at the global economy, it continues to melt down, and you look around it's now again, and I can't put out who it is or what it was, but again, there is information out there that we've talked about. So now we're seeing more pieces, and everybody wants to know, well, is the economy in trouble? And again, I'm not saying it's in trouble tomorrow, and I'm not saying that the markets are going down. Okay, what I'm saying to you is that, again, more warning signs that are showing up. Not to mention that auto companies now are making more money on the paper that they're financing than they are on selling the cars. Okay, because of course that ridiculous bull for 0% financing is truly not 0%, because you get none of the perks, you get none of the rebates by taking 0%. So the effective rate is somewhere between 6.5% and 8% of what you're actually paying for your money. Okay, but this is, if you remember, okay, this is the same stuff that happened back in 06, 07, maybe even 05, when they started out with the zero financing loans. They became too big, and the auto debt became too large. And now, the beautiful thing they have going for them now is now to take care of that depreciating asset that they're financing. They're giving people 7 years to finance it. Okay, so you're taking an asset that's going to depreciate massively the minute you drive it out the door, and continue to depreciate every year. And by the time it gets to year 7, it'll be worth less than half of what it's worth today, and they're giving paper and financing that out. You don't see a problem with that? Okay, again, I'm just saying, okay, again, this is the entire problem. The debt bubble, the debt bomb that we are creating, we continue to ignore between credit cards at all-time record highs. And now, let's add in the phony low rates that we hear about, right? Okay, again, certain people can get advantage of those low rates, but the LIBOR is ticking up, okay, London Interbank lending. And of course, the average guy cannot walk into a bank and get any money, okay, because they're not going to give it to them. So they're forced to go to their credit cards, okay, which are basically, although not technically, but are basically usury rates, okay, and of course, or they can go to the peer-to-peer lenders, okay. But we keep hearing about these great deals in money, and of course, everybody gets lured in and wait till the next big event, and there'll be 0% financing on TVs or whatever, okay. And of course, in those deals, they're trying to attract the people that can't pay. What they want when they do that is they're bringing you in under the guise that you're getting something for nothing. And of course, what you don't read in the fine print is you miss one payment, okay, even if it's, 90 days or 6 months, same as cash, okay. And of course, if you miss one payment, the interest rate goes ballooning higher, and it goes back to day one of when you bought it, okay. So again, the practices that are going on, they haven't changed. They've gone on forever. But again, it's becoming more predominant now because people are working, people are happy, they're coming into the holiday season. We've got all kinds of, people getting checks. And of course, because we're a by-the-month society, why not? Okay. But on the other side of the coin, we've now got mall vacancies hit an 8-year high, okay, of store closings. Now, again, in its own, but does it mean anything? I mean, we know that a lot has moved to the internet. We know Amazon is a tremendous player on the internet, and there's others, okay? And many have moved to that side. So, are sales lower? That I don't know. I don't have a fact, but I do know that the sheer fact, the amount of space that we're using, the sheer fact that we're not renting this property out anymore, the sheer fact that you have vacant malls all over the place, okay, does suggest, again, another potential problem. What are the real estate REITs going to, what are those people going to do with all that property? Okay. Again, an asset that becomes now a liability because they have to still pay the taxes and they have no income stream coming in from rent. So again, there used to be a whole bunch of tax benefits, but now, again, does it mean that the markets or the economy is going to collapse? No, it doesn't mean anything. It just means, again, another little chip off the block. And of course, the overnight repos now, which is interesting that the rates are spiking overnight. That's where we should get our money in at 10% for overnight money. Okay, and again, everybody says, including the Federal Reserve, it's not a problem. Okay, it's no problem that we're running out of money. No problem that we've got to turn this in. No problem that rates are spiking. I mean, the rates are almost reminding me of the action that happens in natural gas every year when the winter kind of starts, when you get these ridiculous moves, okay, and everybody's got to chase it up. So I look at this as just another easy excuse for the Fed, okay, to say that everything's fine. Okay. Now, then of course, we did have 3.5% jobs unemployment, lowest in 50 years, with 136,000 jobs. So the jobs missed a little bit. But again, we didn't see a dramatic rise in wages. We saw a lot of things that are happening. And I think what's going to start to happen again now is the rate will stay lower for a while. But again, a lot of people will start to leave, looking for the jobs, leave the workforce. And of course, that will keep the number low and there won't be such a high number. But at the end, again, to me, everything we saw last week is something to bring in a problem. Okay. Now, you then take into effect, not the bad stuff that's going in Hong Kong right now. Okay, because it's obviously the Chinese wanting to take away the freedom of Hong Kong, basically, which the original one when Britain left, okay, and sold Hong Kong, basically, okay, they made a part of the arrangement was that Hong Kong will remain its own, even though they're part of China. In fact, I've been to China, and when I was there, now again, this might have changed, but when I was there, you had to go through customs when you left Hong Kong and back again through customs or through security when you went into China. Okay, I thought they were the same. In the meantime, their banks are having some troubles right now. Okay, that's a problem. Okay, India having banking troubles. So again, is it here? No, it's not here. But isn't that something that we should be thinking about? Isn't that something that's telling us that there is a potential problem out there? Okay. Again, these are things that happen all the time that we continue to not worry about. Again, we continue to forget that we don't have anything to worry about. And of course, there's always something to worry about. And this is the whole deal with the markets. So do we see warning signs? There's a lot of red flags out there. Okay. And I'm just saying to you, and listen, this is, I'm never going to tell you to sell. I'm going to tell you to hedge. Okay. So that's number one. Okay. But number two, these are just warning signs to say to you that sometimes we have to be careful of listening to the rhetoric on TV. Sometimes you have to be careful listening to the idiotic pundits who only blame the high frequency traders for when markets go down. Sometimes you have to be leery of what everybody is telling you and just observe for yourself. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break and we'll be back with more Bubba's Bottom Line. What's up, everybody? Well, here we go. We're coming in, kicking into the fourth quarter. And of course, if you'd like to hear any of our past webinars on hedging or day trading futures or our micro and mini portfolios, please shoot me an email at bubba@bubbatrading.com. Again, I'd like to help you out. Programs are doing great, and we would certainly love to share them with you. And of course, we've got our new friends at Ticker Talker, where I do some live events for them every Tuesday. That's tickertalker.com, and I'll get you some more information for that. And of course, don't forget about our high school program at Patreon, patreon.com. That's patreon.com/Bubba, Bubba Trading. In the meantime, let's go back to Bubba's Bottom Line and with me, Todd Bubba Horwitz. Welcome back. It is Bubba's Bottom Line. It is Sunday, October the 6th. And of course, you got football today. That's always exciting. And some great football games yesterday. And, markets last week, a pretty wild ride. Okay. But again, I think nothing too unpredictable. Okay. Now, again, as I mentioned earlier, we had the ISM service number. The markets got clobbered. Down they went. They took them down. On Wednesday, after Wednesday's close, we were in reversal mode for the indexes. Okay. So we reversed everything but the NASDAQ. We reversed the Dow, the S&P, and the Russell. We didn't reverse the NASDAQ yet. It wasn't, again, we only trade mechanically. Okay. And of course, I knew Thursday morning there would be a little bit of a rally. I was looking for a bigger rally, obviously, because we expect a dead cat bounce, which should indeed fail. Okay. So in the meantime, the markets were a little bit higher. And then, of course, out came the ISM services number, and bang, down they went 300. And again, I was obviously very leery of my short positions, knowing that based on trading, based on 40 years in the business, that more than likely there's going to be a rip your face off rally from down at those bottoms. And, again, exactly where, I can't say that, but I can tell you, you can see by the blow-off pattern, it was definitely going to be there. So in the meantime, I was able to trade futures on the right side. But again, my long-term position, not so good, right? And again, bang, charging higher, up they go. And they finish the day very, very positive, okay? And of course, on Friday, jobs, they tried to sell them off. Bang, up about 350 or 4, whatever they're up a lot. Okay, so again, not a very good comforting short position, but we are now short the market. And of course, what I'd be looking at now from my money, okay, is from me reading it, we're right at resistance. Okay, and of course, as you've heard me say here many, many times, I don't want to catch the first part of the sell-off or the first part of the rally. I want to catch the retracement and then the break that confirms what we're seeing within the footprint of the market. So again, early this week will be a very key sign. Now it's going to be interesting because Wednesday is going to be, probably Tuesday, Wednesday, but Wednesday for sure is going to be very quiet. It's going to be holiday, Yom Kippur. Okay, it's going to be very quiet. Okay, it may start as early as Tuesday afternoon, obviously because we go into sundown. So we could see very, very quiet markets, which could lead to some interesting stuff. But I think Monday and Tuesday will show us kind of the direction that we're headed, okay, and give us an idea if indeed if that is actually the high, and this is going to sell from here, which would make sense if you look at a chart. This does show a longer-term downtrend. If the high fails here, this would just be another lower high that would indicate we're going significantly lower still. Or if it does break out, then there's obviously a chance they run to the highs. I mean, again, there's nothing ever 100%. And if you remember one thing that we always teach, okay, is the improbable happens once a week and the impossible happens once a month. But based on everything I'm seeing, based on all the action, I don't mind being short. Okay, I do believe that this is right at a footprint that's going to turn the market south. But again, if they don't, we'll reverse at some point and get back on the long side, and that'll be the end of the day. All right. In the meantime, gold was wild last week, and of course, the gold bugs went crazy. As gold got clobbered. Okay, and obviously we've already reversed, and of course then it had this major spike. But we had a couple of levels that we were watching. The first one was 14.95, which they cut through like a hot knife through butter. But then the secondary one was 15.20, which they tried to break it out a couple of times and failed. Now again, I would expect, based on what I'm seeing, that gold will fail from here. Okay, I'm expecting to see back down to the 1440s and then possibly lower than that. But that would be right now my initial target. Okay. Again, earlier we were looking when the charts were running up, they were looking like they could get to 1600. And again, that's not off the table. It's not off the table for this year. But I think based on what we're seeing, based on our position, the next number we should see that should act as some general really good support would be about 1440. Okay. So we're short gold. We'll be looking for gold to head lower. Again, I think that the people with the conspiracy theories and all that other crud that they want to spew is comical in my views. I think that at the end of the day, okay, we're going to see some breakdown. Okay, and again, don't get me wrong. I'm a buyer. I'm an owner of gold long term. Long term, I'm an owner of gold and silver. So again, I look to think them go higher. Oil. Tested 50, it got into the 50s, almost got down to 50. Okay, so again, here we are. And again, I still say we're getting to the high 40s, but I would not be surprised. We saw a fairly dramatic recovery on Friday. Okay, and that's, again, not a surprise. Market, if you remember, oil was down 11 days in a row or 10 days in a row coming in to Friday. You're going to see a dead cat bounce. That is not bullish. Now, again, that certainly could have been a bottom, but we're short. And what I'm saying to you is that should be just a bounce. And that'll be the next setup. And then the next low will take us into the high 40s. Okay. Again, if it's wrong, it'll go up and we'll obviously reverse at some point. But we've obviously been short for quite a while now. And we were long into the Saudi Arabia. So there you go. So my point is that, again, the footprint will tell you, but it was certainly obvious, okay? And in fact, I said it in an interview on Thursday that I would expect oil to rally, okay? Because again, there's no reason to not expect at least a pop off of these bottoms. You go down 10 days in a row, you're probably going to see a rally. the bonds continue in consolidation, but again, looking to try to break to the upside and go higher again, which would bring rates down. And of course, that's consistent with what's going on. It's consistent with all a part of it. And of course, we remain long to 30 and long to 10. Okay. And again, when you look at the whole picture, bonds look like they want to go and continue to go higher. Okay. And of course, we'll stay there until it doesn't. Now, personally, obviously, I'm never a big fan of being long bonds, but, I think that is something that is out there that will help you and to understand what should happen next. Okay. So I think you're going to see that the bond futures are probably going to continue to run and go higher. And of course, the grain markets look really good. Okay. Now they had, they made highs on Monday. Okay. And basically spent the rest of the week chirping, doing not much. Okay. But soybeans, wheat looked really good. Corn pulled back a little bit on Friday, but they all did exactly as we would expect. They went to resistance levels that were higher highs and pulled back, and now they're on support levels. Again, we're long the group now. We're long corn, wheat, and soybeans, and we look for them to continue to move higher. Okay, as I said last week, and I've said for weeks, I think the fourth quarter is going to be really big, and I'm happy that we are long, and I look for much higher prices here. Meats, cattle, fats, and feeders traded almost as if we scripted it perfect. They both broke above. They both went to their first resistance area. They both pulled back. They're both now near some support level, looking to break out and make highs. And I expect to see highs in cattle as well. In other words, I love the whole agricultural space right now. It looks great. And of course, hogs continue chirping around in this wide consolidation band. We like them. I mean, we think they're going higher from here. Now, certainly that could always change. They're certainly not out of the woods, as you would say. Okay, they still get slaughtered and barbecued, but it looks to me that they've come down to some reasonable support. They've been chirping in a range, okay, and been fairly volatile. So we're long the entire agricultural space that we trade there, and that looks really good. So again, I think that the overall markets are telling us, okay, where we want to be. And of course, as you know, we use our mechanical algorithms to get there. And so there's a lot of issues out there. There's a lot of things happening. And I think there's some things that we should talk about and worry about. Okay. But again, never let a story, okay, tell you what you should do in the markets. Let the markets tell you what you should be doing. Okay, because that's exactly, if you look at the dollar had tried to get to that par level and pulled right back. Okay, but it is still on that upper trend, upper trajectory. Okay, so again, we're still expecting the dollar to go significantly higher because remember, the rest of the world, okay, uses the dollar also as a fear investment, a fear gauge. So there's a lot of things out there to look at. And again, my words to you are always be careful, be prepared, and know where your exits are. In the meantime, just a couple of stories before we get to my commentary. And, we had the big story on student athletes. Okay. And again, should they be paid? It's really hard to pay a student athlete. But of course, their free education is not really free because of what they have to do to get it, right? They're basically, when you go as an athlete, it's a full-time job and they own you. Okay. I believe that they should be able to be paid for their images, okay? But I also believe they should be able to earn money however they can. Real students, okay, and I don't mean real, but students that go just for college, they're allowed to work and do what they want. So why is an athlete any different? So an athlete should suffer. And the worst thing is when the NCAA rules are A, so antiquated, and B, so ridiculous, okay, that the NCAA should be abolished. It should go with the Federal Reserve and go away, okay, because they have no clue either. Do you realize that if you have a bagel, somebody gives you a bagel, it's called a snack. If they add cream cheese to the bagel, it's called a meal. Now, does that make sense to anybody out there? It certainly doesn't to me. It's actually stupid. But of course, the NCAA is stupid as well. So they should be ended because, again, you can't pay them straight out because there'd be a war who gets paid, and then every athlete has to get paid. Okay, but in the meantime, just a thought, and we'll see, but there should be ways that they can ease these rules so that guys can get what they deserve and get paid for their images as well. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horwitz, October the 6th. I love September. October the 6th, and we'll be back with my commentary right after the break. This is the Bubba's Bottom Line. What's up, everybody? Again, remember, we're doing a lot of stuff with Ticker Talker now, tickertalker.com, and I will get you some more information. But in the meantime, you can check me out there on Tuesdays around 2 Eastern. I do a 30-minute webinar for them, and certainly want to check it out. Come and see me. In the meantime, don't forget about our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. Now let's get back to Bubba's Bottom Line with me. Welcome back. It is Bubba's Bottom Line. It is Todd Bubba Horwitz on Sunday, October the 6th. Maybe I'll do it one more time. And of course, last week the big news broke out. The big news, free commissions. Free commissions, all the big brokerage houses, okay? Free commission free. Well, let's talk about that for a minute. Number one, free is not free, okay? As you look into the closer things, okay, yes, some of the stocks are free, but none of the options are free. They're 65 cents a contract, okay? That is still pricey, okay? It's still hard to be an active trader at 65 cents per contract and cover all those costs. So again, the whole story of free is not free. But what is the motivation behind this whole free stuff thing, right? So if you don't understand how brokers actually work, okay, brokers are actually working on the money that you put on deposit. That's why everybody wants to have so much money on deposit, because they're actually making money every day, whether you trade or whether you don't trade, okay? They're not losing money on your 65-cent commission, okay? So they have their own agenda, which is to raise assets, to continue to stockpile capital. So each broker now is fighting for that same thing. And unfortunately, what they're really going to do is they're going to destroy competition in yet another business. And we're going to end up with the same crap we've got in the banking system, where right now we've got, 5 major banks, 5 major players in the banking system. And soon you're going to have probably 3 to 4 major brokers, and they will eliminate competition, which will eventually eliminate service, okay? And originally it'll come back and haunt you and me, the person who wants to use it, because now once they've already busted everybody out, which is basically their plan, it will take away the edge of you getting the best deal and having other places to go, keeping competition keen, which is the entire problem that we're starting to see here as well, is the lack of competition, okay, through everything, which is why between the regulatory bodies and everything else, it's a disaster. And how they got this totally through is beyond me. But of course, the big banks, which that's what brokerage houses are, okay, the big banks got a way of playing with the system, okay, and of course, they got it done. But remember, free ain't free, okay? It's a crock. Again, it's cheaper. You save the ticket charge, but it ain't free. So the big advertisement that all the pundits were drooling over, how could they do it? Not so free. And the other thing is, the stocks all got hammered, okay? If you're a trader, you may want to look at buying some of those stocks. I'm not recommending anything in particular, but I'd certainly be looking at the brokerage stocks right now, because that sell-off was well overdone, and it's done because it was done in a panic, and people don't understand what this really means for the brokerage firm. This is really more likely going to be a good thing for them, because they're going to need a lot of assets coming in. In the meantime, this is Bubba's Bottom Line, Todd Bubba Horwitz, and as always, I thank you. And of course, football Sunday night. Who is the Sunday night game tonight? I don't remember. Okay, but I believe it could be. I don't know. Let me look at it. I can't remember. Okay, but I will. Kansas City, Indianapolis, I believe it is who it is. We're going to take. It's amazing. We always take the dog, and we had the Rams at 1 on Thursday. We're going to take Indianapolis plus the 11. Okay, for beer and a pizza. We like them, but of course, Indianapolis got some big injury problems. And of course, you got Patrick Mahomes. We'll see what happens. In the meantime, everybody, have a great weekend. Have a great Sunday. We'll see you tomorrow with Bubba's Bottom Line. And as always, I thank you for being here. We'll see you later.